Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. This is the complete death of the US dollar through here, I believe. And this decade is going to bring something new into the markets. It's not going to be the same. It's going to be something new. What we're seeing here right now, guys, here is the Fed funds rate, obviously for US here. And I want to share something with you here. Right? This is going right back here through to the 1954, right? So 1954, and you can see where we are. We're back to 1954, and you can see what's actually happened over time. Now, the over time, right? This is the reason why this is something really, it's a telling story of what's going on right now and what's coming next. See, you know, the death of the dollar and something new is coming. And the reason why I say that is because look at this here, right? Every time we actually got to a point of 20% interest rates, man, imagine that, 20% interest rates. I think my father here in Australia, I think they got up to about 14, 15%. And when I was a kid, he actually lost all these, he actually lost his property with that there. So the markets actually ran up here, right? So the massive spike in interest rates through here. But look at this here, right? We had a drop down, and then we had this high, and then we went through a bit of a crash, okay, a bit of a recession, and then when they raised the interest rates, guess what? The markets could only go to this point here and created a lower high, so they actually couldn't raise them back up towards where this point here, right? Basically where they raised it enough to where they pricked the next bubble in the next recession, right? If you look at Ray Dalio stuff, this is the short-term debt cycle. Every, say, 7 to 10 years, we have a recession. Does that make sense? So the market rises up, and it gets to a point where then it starts to prick the bubble and it becomes too much debt because they print money, and then they go through another recession. The market drops down, okay? And then as you can see, we went through a recession here in 1990. Okay, the market drops down, market starts to find a bottom, and we start to go through here sideways, and we poke back up through there into the 2000s. This is the maximum point that could go to. But notice how the market is every time we go through a recession and then an expansion, we can't actually get the interest rates back up to the recent high points because we've got too much money, right? So if you'll be looking at, say, a debt here, if you're looking at the debt, just say, for example, this line here was the debt. Well, this point through here, actually, let's do a different color so you guys can see that through there, right? So let's just say, for example, this here was the debt at this point through here. Okay. Let's say this point here was the actual debt here. So because the debt was there, that's the maximum they could raise it before it starts to get too much for them. Okay, and then it starts to get very, very wobbly. Then the market drops, and then this point through here, the debt actually goes up a lot more. So now the debt goes up to here. So because there's more debt, they only can raise the interest rate so much before they get what? Another bubble. And then more debt is accumulated through here. And then to say, for example, this is the debt now. Makes sense? And then that's the maximum point through there. That's the reason why every time we go through an expansion, we can't actually raise the interest rates up to the prior time we actually had an expansion. And as you can see, that we went through an expansion, and then 2008 happened. They raised it. They almost got it back to this 0.6 point through here. And guess what? Boom, down to zero. This time we only got just above 2% before we pricked the bubble, and then down here. Notice something through here, guys. Downward trajectory. Now we're back at zero again. You know, I think it was as you can see, right, slowly falling off a cliff. And now we're back down to zero again. So I don't know how long this is going to take, but there's going to come a time where this thing just gets, and with all the printing right now, something's going to happen. There's going to be a major default on the US debt. Something's going to happen here, guys, and this new era here. This is the end of the fiat money system. You know, the paper money system. That's the reason why you're seeing a lot of push now for digital currencies. You're seeing a lot of push now for just using card instead of cash, which most people don't use cash these days anyway. It's mostly card. And so this is the reason why, guys, this is the start of something new. And this is, this is the death of the US dollar, and what this tells me, guys, is moving forward this year is the United States may be a very strong power within the force there, but something else is going to take its place. China right now seems to be the rising power right now, as Ray Dalio talks in his books. And then, even if you didn't look at Ray Dalio's books, you can see what's happening right now, right? China and America are going head to head right now, really, 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 really big right now. They're just going head to toe, right? So China right now is the rising power. I don't know. Maybe there's something that maybe we go to a Chinese currency. Maybe we start using their currency for the world currency. I don't know. But anyway, guys, this is the reason why that this, the death of the dollar, and something new is coming. And so, and that's the reason why I said that. Anyway, guys, leave a comment below and let me know what you think about this here, and about what's going on through here, guys, because this is actually going to be something that, it's going to be a complete change time when it comes to the US dollar there. So, the US dollar. And again, the big picture here, guys, maybe that leads to inflation, massive inflation, with the whole printing of money and stuff like that. That's obviously a very, very, very possible thing. We haven't seen inflation for a long time. I just hope we don't keep printing too much money, because then it's going to create a massive inflation. Well, it's actually already started inflation, right? Like, look at food prices. I was talking to my mum just recently, and she's like, some of the food prices are doubled to what they normally were in the shelves. And she was like, I went and saw my mum recently, and she goes, Dow, that's what she says. She calls me Dow. Dow, when I went to buy my yogurt, it was like $2 normally, or $2.70 or whatever. Say $2. And then she goes, and that's how it's normally priced, at $2. But then when I went and got this recently, it was like $4 something. And I said, Mum, so it's basically double the price. She goes, yeah, that's crazy, right? So we're already starting to see inflation in the food sector there as well too. So I know, guys, something's really interesting, but this is the death of the dollar, and something new is about to happen here. So that's what I'm seeing through there.